I'm Elaine Shoemaker. I've been with the bank forever, since 1987. Came in as a safekeeping manager and then promoted to the financial services director, not director, just kidding, manager. Our areas oversee the safekeeping and collateral operations piece. And today, I would like to introduce you all to Deidre. Deidre has taken Kylie Mergen's place as the Director of Financial Services. Deidre, welcome. We are so excited to have her.
Thank you. As Elaine said, I'm Deidre Duran-Gray. I'm the Director of Collateral and Safekeeping Operations. I have been with the bank since 2010. After the financial crisis, I was done with being an examiner and got a job here. In 2017, I decided to go ahead and join our legal team at the bank and became one of the individuals that helped to build out our compliance department. And in the end of 2022, I had this opportunity to come over to Collateral, and I'm now, as Elaine said, Director of Collateral and Safekeeping Operations, which includes Elaine's section and collateral review and verification process. So I'm still in my learning phases, and this is my first webinar. So thank you all for joining us today.
Okay. All right, our goals for today. We're going to go over some of the recent changes just adopted by our board of directors. We're going to help you understand our lending value process just a little bit better. We also want to show you how to report collateral to us, as well as get that delivered loan collateral back to us. We're also going to go through some of the forms, or where to find the forms on our members-only website, make it a little easier for you to access everything that you need there.
Yeah, as Elaine said, we're going to go through several things today. Some of the items that are on our agenda have been on previous years. Some are a little bit newer. So we'll go through that lending value process, describe how often that frequency is done, look at some of those key factors that are derived with lending value. We'll look at member product policy changes and see what things have changed over the last year. Those things can change on a quarterly basis. We try to keep that limited for you, but here we'll recap the major changes throughout the year. QCD will really be the bulk of what we're going over today, the filling out the form. Elaine will go into great detail on where we go through filling out the QCD. And again, we're doing a lot of that because a bulk of our membership is blanket pledge members, and they fill out the QCD form. So that will be a bulk of that today. We'll go over some pledging and releasing of delivered assets, looking at securities and loans, how you go about doing that. We'll look at collateral forms and reporting. Again, Elaine will show you various forms that we can go through that you can report or what they mean and explain that information. And at the very end, we'll wrap up with questions, Q&A. And, throughout this, we hope to answer other questions as they come about. And we've got off to a little rough start, but I think we're on the right track now with the chat. So please let us know if you have any questions along the way.
Looks like our Q&A is working well, so maybe our chat's not, but our Q&A looks good. Okay. So, first off, we're going to talk about the lending value process. We do this. We look at the blending values every year, at least once. It really is made up of, for most everyone, 3 specific components. There's a 4th component only for our specific pledge members. But the first one is a volatility factor. So you start at 100%. You're going to look at a volatility. We're going to assign a volatility factor. The volatility really is the potential change in price during the holding period that it would take for us to liquidate your collateral in the event that we had to do that. And I'm going to preface this, we have never, ever had to do that. But we have to be able to prove to our regulators that we can do that. So the volatility is different for asset categories and by pledge type, right? Blanket lien members for your loans, it's a 90-day look back. For the CDFI institutions, it's a one-year look-back period. Insurance companies that are domiciled in a state where it has an exemption for the Federal Home Loan Banks, that is also a 90-day look-back. And all securities, it's only a 10-day look-back in that volatility period. We also look at a liquidation factor. Really, it's based on FDIC historical data. It's really the level of risk and the difficulty it is to liquidate collateral in the event of default. Like I said, we've never ever had to do that, but we have to put that component in, that liquidation factor. The credit factor really is broken up into two different pieces. Credit factor 1A is, it's an asset quality, and we're looking at the historical performance of those asset types. Right? So worst case scenario, what does it look like per asset level or asset type? Then we also do a forward look, and we're looking at the delinquency trends in our four-state area. And we measure that. So you start at 100, you deduct for a volatility factor, deduct for a liquidation factor, deduct for a credit factor. And it brings us down to the current lending value that we assign to each of those asset categories. For specific pledge members, there's a model risk factor, which really is just the potential market value price uncertainty for those loans that are pledged by a third-party vendor. Okay, those are the only loans that we send out to pricing vendor today. So that's why that only takes into account for the specific pledge members. This year's lending value recommendations were approved by our board of directors on March 24th. The securities and delivered loans lending value changes will go into effect next Monday, April 3rd. So any asset category that is considered to be delivered. So again, securities and those loans that are delivered to the Federal Home Loan Bank. Lending value changes will take effect next Monday, April 3rd. For all of those blanket pledge members that report their loans on the QCD form, those lending value changes will not go into effect until you submit your June 30th QCD form. And the deadline for that is, what, August 14th? So you have up until then till you feel the impact of those lending value changes, okay? So some of those lending value changes that are coming, you know, we kind of sent out a preface, an email. I think it came out on the 6th of March. Yep, we're going to go into a little bit more detail, but still pretty high level today.
Yep. As Elaine alluded to, you know, she walked you through kind of how that lending value is derived. So now I'm going to go ahead and actually kind of let you look at what that turned out to be for this year. So we're going to start with our unrestricted collateral, and that entails the conventional mortgages, FHFA insured mortgages, VA, guaranteed, and multifamily. There's really not going to be a big surprise here. You're going to see overall that in this category that the lending values did decline from last year, which again, it should not be too much of a surprise from last year, given the interest rate environment that we were in.
Right.
And I mean, so I'm kind of the bearer of bad news in this, but that's okay. I mean, it's not as bad as it could be. So let's walk through that. As far as conventional amortizing mortgages, that declined from 81 to 77%. Our conventional interest only, 75 to 72%. FHA and VA guaranteed less than 90 days went from 92 to 87%. Anything that was greater than 90 days delinquent, we went down from 88 to 83%. And then on our held for sale mortgages, anything that was held for sale eligible to be sold to Fannie, Freddie, or Ginnie went from 92 to 87%. And held for sale not eligible to be sold to Fannie and Freddie or Ginnie went from 81 to 77%. So we'll continue on with what that looks like for the rest of the collateral categories.
So for securities, most of our assets that are pledged to securities are the agency's residential pass-throughs. They dropped from 98% down to 94. The CMOs went from 97 to 96. The agency structured bond was 96, went down to 89. And there were multiple other changes. You know, we could spend a lot longer talking about.
Yeah, these
those
are the
today.
high level.
Yeah, just high level. That covers the bulk. You know, I think it's kind of important to know that last year when we finished this lending value process, you know, the markets kind of went crazy.
Yeah.
And so you guys got the stability over the last year of what happened right after we implemented our last lending values.
Okay. And here on this slide, this is more of our restricted collateral. So on this, we have our loan type 4 and 5, and this is restricted to 25% of total assets for blanket pledge members, reporting any call report through the QCD. There is no, I just want to note this, there's not a 25% restriction to total assets if a blanket pledge member is on delivery using a limited template or an expanded, like specific pledge member using an expanded template. However, with the caveat of this is that our blanket pledge members, to utilize the restricted category, you must exhaust all other eligible loan collateral before hitting the restricted category.
The unrestricted category.
Yeah, I mean unrestricted, sorry.
Nope.
Yes.
You're good.
So yes, must exhaust all that going through that. And like I said, while the previous slides I showed you had a lot of declines in the lending values, you'll actually see a mix in here. Oh, okay. Sorry, I'm loud. I'm a little sick too. So you'll see a mix of declines and increases. So let's go ahead and go through that. Under the type 4, ag real estate went from 66 to 72%. Commercial real estate remained unchanged, which I believe that's at 65, 68% now, somewhere in that ballpark. Second mortgages on residential 1 to 4 family went from 71 to 66%. HELOCs 71 to 66, and residential construction from 66 to 63%. Now, our type 4 collateral is really for CFI institutions only, which is an institution that's below a threshold set by the our regulator, which is the FHFA, and it is established on an annual basis. So I think Elaine will give a little more information on that.
I've got a good definition for you. It's a community financial institution is defined as an FDIC-insured institution with a specific asset size based on the average past 3 years using your end-of-year financials. So this year, for 2023, the current cap, so the cap for your average 3-year history, is $1.417 billion. So the cap just keeps getting bigger and bigger.
Yes, it does. So it does, like Elaine said, it changes on an annual basis, and again, that's established by our FHFA regulator. So, so these categories of loans are only for the CFI institutions only. So, as you can see, operating loans, they did increase from 57 to 63%. Equipment loans, 54 to 58%. Student loans went from 76 to 85%, but I would like to mention that in order to pledge student loans, it does have to be pre-approved by us. We will use that as collateral on a case-by-case basis. So it's not available to everyone without that.
We threw this slide in just to kind of give you a general impact of our lending value, what we looked at. Looks like we're down, what, $3 billion?
Yeah.
Sounds like a lot, but you know, when you're talking $116 billion.
Yeah, I was going to say, and actually, I think overall, I mean, like I said, you'll see the general decline is about that 3%. But I want to say, Elaine, that last year it's offsetting what happened last year with the 3% bump.
Exactly right. Exactly.
So, you know, some years are better than others, but this was the overall change with, as you can see, the loans had the biggest percentage decline with the 4.6%. Other collateral, though, you'll see that it jumped up 10.7%. So definitely a good recap of what that looked like overall with those lending values being applied. So,
and we thought we'd sneak this little slide in.
Yeah.
This is historical lending values for our loans, and major security types. But so you can kind of see, like the single family, even back 6 years, was at 79, we went up to 80, down to 78, back up to 81, and now we're back down to 77.
Yeah.
So it kind of ebbs and flows. So unfortunately,
yeah, it's just one of those years, but I mean, overall, if you look at it, there's not significant change generally. It seems pretty stable year over year, so that's a good thing.
Yeah. All right. So also along with those lending value changes, another collateral change is to the LIBOR index loans. Okay? So no adjustable rate IBOR, including the LIBOR loans, if your note date is dated after December 31, 2021, and it is still LIBOR linked, or a U.S. dollar LIBOR tenors of 1 week or 2 months, or all of the other remaining IBOR tenors without effective fallback language that still remains IBOR linked after June 30th of 2023. Okay, so below, we put the effective fallback language definition on the screen for you, but really, we've been working on this, this is an ongoing thing for what, 4 or 5 years now?
Yeah, not new.
Right, so the LIBOR cessation date is June 30th, 2023, coming up. So with the implementation of the LIBOR Act that was enacted by Congress, basically it says if you don't have fallback language, it defaults to SOFR, right? So our expectations are that after June 30th, there is no more LIBOR linked, no more LIBOR loans. You would not need to report those separately on your QCD when you file the September QCD form, right?
Yeah.
Everything would either become ineligible or it has a new index, right? So that's a pretty big change. We're all looking forward to that. We are required to provide LIBOR-linked information to our regulator. We're happy to be that's coming to a close as well.
Yeah.
All right. Deidre, you want to go over this other collateral change that we?
Yeah, let me get to that. So it's kind of more in regards to, it is a collateral change as far as if we have a member, a blanket pledge member that is humming along and then all of a sudden we're kind of experiencing some, deterioration in asset quality. This is going to be a trigger that we're going to require a collateral loan listing at that time. So if they have, this was new, I think, in the latter half of 2022. So you would have seen some kind of notice that was sent out. We just recently kind of redefined the definition of the non-performing assets. I think it might have been this last board meeting. And as you can see, if you hit a non-performing asset, which for banks and thrifts is defined as non-performing assets, excluding any government guaranteed loans, to Tier 1 capital and a loan loss reserve greater than 75%, we're going to require you to do this collateral loan listing on a limited template. So you're going to be required to loan detail all the loans that you're pledging to us at that point. And for credit unions, that definition is slightly different. It's non-performing assets to net worth plus loan loss reserve greater than 55%. But either case, just wanted to make you all aware of it because it is fairly new within the latter half of the year. And like I said, the definition recently changed. And we just want to make you aware that if you do hit one of those thresholds, we will require you to do a collateral loan listing at that point.
And we will be in contact with you.
Yes.
If and when that should ever happen.
Yes.
All right.
Okay. And then as far as agreement types, at the Federal Home Loan Bank, we do have 2 different agreement types. We have blanket pledge members and we do have specific pledge members. As we kind of mentioned earlier, a bulk of our membership is the blanket pledge members. They really represent our largest category. At the bottom of that, I'm kind of going out of order, it represents 95% of our membership. So if you're a blanket pledge member, you are executing an advance pledge and security agreement blanket pledge with the bank. You're required to report your collateral that you pledge on the QCD on a quarterly basis, and that's just what we do for the blanket pledge members. You would find any kind of lending values that you wanted to know about a particular asset category underneath the blanket QCD lending value column within the schedule of eligible collateral within the member product service guide. Wow, that's a lot of stuff to say.
Right.
But that is kind of tricky. It's kind of on the far left hand of that column, but you'll see it at the top. It would tell you, you know, this is the QCD lending value. So that is what a blanket pledge member would go off of. Now, we do have the caveat here, if a blanket pledge member is on delivery, so as I alluded to just a minute ago with the MPAs, if there's some kind of worsening in credit quality or other concerns that we may have, you know, an institution can be placed on delivery. And at that time, we would have you utilize a collateral loan listing using the limited template and deliver loans into the bank. So that's kind of a summary of what the blanket pledge member is. Specific pledge members, again, they're a smaller portion of our membership. They consist primarily of insurance companies and housing associates. Those members execute an advance pledge and security agreement for specific pledge or housing associates as they do deliver their collateral into us directly. We have an expanded template that they fill out information on and update on a monthly basis, and that's how we get their collateral. So we're looking at everything they have, and they can find their lending values within the mortgage or MPSG under the expanded lending value column. So again, kind of tricky. And then we have Class A and Class B within those columns too, which adds another layer of complexity. But as you read over, you can see. But a Class A is for insurance companies domiciled in the state that has exemptions for the bank. Class B would be any non-depository CDFI, housing associate, or insurance company domiciled in a state that does not have exemptions for Federal Home Loan Bank. So you would see, I think, a slightly lower lending value in those classes when you would look in the schedule. So just be aware of that.
It has to do with the liquidation factor.
Yes, liquidation factor, slightly lower bit there. And as I mentioned, delivered loans, you would be using, specific pledge members would be using the collateral loan listing for expanded template. Again, as you can see, the number is very small. 5% of our membership is, specific to specific pledge members.
So since 95% of our members report collateral on the QCD form, that's where we're going to spend a good portion of our time this morning. Sorry, it is afternoon, thank goodness. All right.
You made it.
Preparing the data. You know, that's key, right? That's key.
It is key.
So what other recommendations do you have for them?
I mean, really, again, it's making sure that the information that you start with, it's eligible to be pledged, right? Make sure that you're reviewing and looking at that schedule of eligible collateral guidelines. I know in my brief time here in my role, I've sat with some banks, and man, there's some that are really on top of it. They know this stuff inside and out, and they have their processes very formal. And this goes into the second point. They can identify their critical reports. I mean, they have spreadsheets that are built. They know every reason why, you know, a certain loan isn't eligible to be pledged. They know that, and that's how they process that and keep track of for their reporting processes. So whether you have, you know, a formal process, an informal process, as long as you have something to make sure you're making, you know, you're following our eligibility guidelines. And if something isn't eligible, remove it from, you know, your QCD loans that are pledged. It just ensure that your process are actually working when you're going through that. Last thing, this is very key right now. Keep borrowing capacity and future borrowing needs in mind. I mean, with what's happened and unfolded within the last few weeks, we've had numerous calls about capacity and building up, you know, additional capacity. What do we need to do? Working with several institutions on various collateral that, hey, can this be pledged? And we're working with them on an individual basis. So always keep that in mind too. And then as far as submitting the QCD form, you do submit it within the 45 calendar days after the quarter ends. So that is where we're at there.
Okay. So you say, gosh, where do we find this? So out on our members-only website, if you look under the collateral option, there in the drop-down, it's the second one down. It's the QCD form. When you go there, it's going to take you to a page that looks like this. You're going to do the QCD online. It's the form and the guidelines. There's a link just to the right of the box. You can also print a hard copy form, which, you know, I know there are some institutions who really enjoy their paper. I like my paper. I do. But it's so much easier to fill out the online form because it does all the calculations for you, and it provides close of business the night before values on your outstanding credit obligations and securities that you have had pledged. And today, we're going to go through the QCD online because actually there's about, 95% of our blanket pledge members fill it out online. If you're doing hard copy and because you're just not sure how to do it online, give us a call. We'll be happy to walk through with you. On this page also, you'll find a link to the schedule of eligible collateral. You know, we provide that in multiple different ways for you. Also, you would go here if you want to, like as Deidre was talking, all these institutions who are looking to build their capacity or want to add additional capacity, you can amend your QCD form just the same way that you would go about filing that first one, right, for the quarter. And we'll kind of go through that here in just a minute. But this is where you would come if you wanted to amend that. So we're going to start walking through this. When you select that online form, you're going to come here. It will take you here, give you some instructions about emails being sent. So if you're a QCD data entry person, we have two roles, right? A security data entry, a data entry, QCD data entry person, as well as an approver. Okay. There's always a maker checker. You can be the same one. One person can have both roles, but we incorporated the two roles for dual control. It's and a lot of institutions require that. So online form, and it will show you the status. So once you click on this link on screen, it will take you to the form. And as you can tell, the body of the form is all grayed out. It will not become active for you until you put your QCD, the assets, in that upper right-hand corner, that first green arrow. That's your assets for that quarter end, okay? So if you're filling out the 331 QCD form, it should be the assets you put on your call report for 331. Then the next question down, are any of the loans LIBOR linked, yes or no? You have to answer those two questions or those two fields before you can move off of this page. And the rest of the data entry boxes open up for data entry. Okay, so I filled in my amount. I said, yes, I have LIBOR-linked securities. Ready to, you can tell the difference in the form. The form is now open for data entry. So each asset category, we want the aggregate number of loans that you're pledging for each of those asset categories. So you've got 50 single-family loans for the aggregate total unpaid principal balance. So number of loans goes in that first column on the left, unpaid principal balance in the middle, and it will calculate the lending value based on that percentage. Your lending value for that asset category will be in the far right-hand column. On this, this is all of your unrestricted assets. It is your single-family, FHA, VA, any held-for-sale loans. You can report held-for-sale loans on the QCD form up to 15% of your assets, okay? Anything above 15%, you will be required to do daily reporting, which is sending us a file every day of your loans that are out, that you're pledging. If you're reporting on a daily basis, the form will be pre-populated for you what your values were from close of business the day before, okay? Down in that middle section, the other columns. So if you've been pre-approved to pledge case-by-case collateral, so something doesn't quite fit in our box, our normal box, and then you've requested a case-by-case review, we will have given you a case-by-case number, a collateral type code. So you would need to enter that there. On that first column is the type, or the case-by-case number, then the collateral code, then the number of aggregate number of loans and UPB. And we would also tell you what the lending value percentage is, because you'll need to enter that in that other box. Okay. Moving down the form, if you had securities pledged with us, this value down on the securities line is what your lending value of your securities, the close of business the night before, and it will tell you what the date is, okay? On each of these, this unrestricted page and the unrestricted page, if you'll notice on the far right-hand side, the little blue dot with question mark in it, those are our hover function, help. So if you hover over that, it will give you all of the underwriting guidelines for that particular asset category. To say, we provide those, that information to you in multiple ways, but it's a very helpful tool. Okay, so once you've pledged all of your unrestricted assets here, you want to go to the next page. You can either hit the next button, or there's tabs across the top. You can select the restricted tab. Okay. So once we move over here, that very top red arrow is restricted collateral limitation. That value is 25% of the assets you entered on the first page. That's why the form won't become active, because there's a lot of things based upon that value within the form. So in this scenario, based on the assets I had entered in on the first tab, the most restricted collateral that you can pledge is capped at $12,500,000. Okay, so as you enter your aggregate number of loans and UPB, it will calculate the lending value. And then in my case, I've hit the cap, it is going to adjust the lending value of that last category. What was that? That's my home equity loan. It has capped that to just bring me up to that 25% cap, okay? And it will tell you, there's an alert up on top, lending value has been adjusted for the restricted collateral limitation, okay? So it's kind of an important thing. I mean, you can pledge more collateral if you want, but it won't receive any more lending value because you've already maxed out, okay? So here, this is our ag and commercial, seconds, HELOCs, the residential construction. We've still left the multifamily and commercial construction on here, but again today we're still at a zero lending value with those. And we do, I'm kind of surprised, but we do actually have some institutions who still pledge. It's easier, I think, for them because they don't want to change their reporting. Yeah, it's hard. So just kind of pay attention to how your lending value and how those are calculating out. And in my scenario, my institution is a CFI institution, right? Again, there's the definition. 3-year average asset is less than $1.417 billion. I can enter collateral in that section 4 in the CFI collateral box. If my institution is not considered to be a CFI collateral, that portion of this form will still remain grayed out. You won't be able to put any information in there, okay? All right, move on. Additional information tab. So now this is all required data. You can't move off the page until you answer all the questions.
Sorry.
As frustrating as that can be, it is for us as well. So questions 1 and 4 are just asking about, are the loans owned by an affiliate or are they purchased? And if so, please put the name of where they were purchased or who they're affiliated with. Questions 2 and 3 are asking about custodial and servicer information. And question 5, the material adverse change in the past 3 months. Has your institution experienced an adverse change? Yes or no? And then,
and I would just say a material adverse change is probably going to be something pretty drastic. You're going to have had something that's really going to impact the financial institution. I know I had one recently, someone asked, and they were just changing their strategy for pledging collateral. That wasn't necessarily a material adverse change.
Right.
So just in case you had a question on that.
Okay. All right. So once you've answered all of those questions, let me back up a bit. If you have comments you'd like to put to your QCD approver, I'm sorry, this one is to us. If you have any comments that you want to share with us, so maybe the reason for your adverse change, or no, the servicer information that was provided to you is not accurate, maybe in the comments box, who is your new servicer? You've added one. So that will stay with the QCD form and then come all the way through to us and cause your form to stop that. So it will be reviewed by financial services.
Elaine?
Yeah.
We did have a question. It says, is integration an option to upload data to the online QCD form on the horizon in lieu of manually typing the data into the form? Have we considered that? Is that been talked about?
Paula, I would love to say yes. Yes, it has been talked about. How far out on the horizon? I honestly can't tell you. It is a discussion topic. We'll just leave it at that, Paula. We appreciate that question.
It would be nice.
It would be exceptionally nice, not only for us but for our members. Goodness. All right.
Well, thank you for that question.
Yes. All right, we're going to move back then we're going to try to move back anyway, to the Collateral Summary tab. This gives you values for what your collateral value looks like today, as well as what it looked like as of the true quarter end. So it's going to, for today, it will take all of your values you just entered on the form, plus whatever your securities values, if you have securities or warehouse loans pledged, what that value is of today, that will be in the far right-hand column. Okay, that's your today value. Through quarter end, we'll go back and look at your historical values for your securities and your warehouse loans, plus whatever loan detail you just entered on the QCD form, okay? So that's what it would have looked like at true quarter end. And here it's broken out as an unrestricted collateral for loans and securities, restricted collateral. It's going to tell you what your limitation is. And then in that box that I've captured there, it will show you my excess restricted collateral capacity is 0 because I've maxed out all of my restricted collateral that I can pledge based upon my assets that I entered on the first tab. Okay, so wanted to show you what it looked like, when it wasn't a perfect scenario and everything was great. Okay, the excess collateral values at the very bottom of the page. that has to be a positive value for current day. Okay? You can't submit your QCD form if it's going to put you negative collateral. That just
Has to have it.
Yeah, there's a control in place on the form. When you get to the submit page, it won't let you submit because it says you don't have enough collateral pledged.
Yeah, you have to have that collateral.
Yes. All right, so taking us back to this last collateral page, it's, we want you to review it for accuracy. Read the certification, you select the I agree, and if you want to, you're the QCD data entry person, you want to put comments in the box down below for your approver. You know, this captures X, Y, and Z loans, but left out A loans. You could put that down there because then when you hit the submit button, it will send a email to all of the data or the QCD approvers, so they know that the QCD form is ready to be approved. So once you hit the I agree, the submit button will become accurate or become active, and you will be able to hit the submit button. But in my example, I wanted to show you, it will not, even if I did select the I agree, I would not be able to submit my QCD form because I'm trying to pledge more in collateral than I have entered as my total assets on tab 1. There is a control in place that the form will not let you submit it, and it should tell you up top in red what the reason behind that is. So once you correct that, oh gosh, I didn't put my assets in right, or I fat-fingered my UPB on my single-family loans, go back and correct that, then there should not be a red box up at top. You select the I agree and hit the submit button. So then, gosh, what happens? The QCD goes to, or it sits out there waiting for your approver to come back in and approve the form. Once that has been approved, all of the QCD forms go straight through to our collateral application and update your borrowing capacity within 15 minutes, okay? You know, it's relatively quick. There are occasions when it stops in our exceptions queue, which we monitor all day long. Some of the reasons that would cause it to stop is if you've answered yes to questions 1, 4, or 5 on the additional information tab, or you're required to do a loan listing. So we're waiting for that loan listing to support that, to get that loan listing from you to support what you've been entered on your QCD form. It will stop it if you put anything in the other fields. So any case-by-case collateral that you've entered. It will stop. We'll review it to make sure that you've got the right codes entered and the right lending value. Make sure that everything's been entered correctly. Then we'll release it and let it move on. Or if you put something in the comments field that you wanted us to read, you know, an adverse change reason, or whatever. If you put anything in that box, it's going to stop. Some of the most common issues that we've run into that people have called and said, you know, I can't, my form won't let me put any values into it. Well, did you put assets in the populated field, or populate assets in that top box that enable the field, the data entry fields? Did you pledge enough collateral to cover your current outstanding credit obligations? What we run into every month, every quarter, is, well, I've submitted the QCD form, but somebody from your institution forgot to go in and approve it. So we can see it's sitting in a submitted state. It's just not been approved. So keep in mind that it's always a two-step process. Even if have both roles, if you go in and you're the data entry, you put it in, you submit it, you log out, log back in, you're the approver, and then you can go in and approve the form, and then it will go on, okay? All right. So you've submitted your QCD form. That's
Yep.
awesome. If you wanted to amend your form, when you brought that form up on the unrestricted tab, there will be an amend button. So I've already submitted my 1231 QCD form, and it's not yet March 31. You could still go amend your QCD form today, your 1231. You would bring up the form and you would hit the amend button. All of the data entry boxes will become active again. Same process though, you would update whatever you need to, submit it. It will go to the approver for approval, and then once they're approved, it will come through to us. But again, it's the two-step process.
Now,
but it's just that easy to amend your form.
Now, when you amend, Elaine, you can't amend even though it's after the quarter end for assets that you've acquired after 12/31
No,
per se.
no.
Correct?
It would have you can only put on your 1231 QCD the assets you had on your book as of 12/31.
Yep. I seem to get that question often when I amend during a period no, it has to be the assets that you own at that period end.
Right.
So.
And if you've acquired them in January, February, you have to wait until your March 31 QCD form. So, securities. We have a number of institutions pledging securities to us today. We offer custody services, safekeeping services. You know, you don't have to pledge your securities as collateral, but it's definitely an option. In order to pledge securities, they have to be held, they have to be cleared in our custody account. You know, you can purchase it, but you can't pledge it until it actually comes in and clears. You'll have to instruct us to pledge it by completing a collateral activity report, or a CAR, located on the members only website under the collateral menu, under the collateral option, and then drop down to form. You'll want to fill in, should be a fillable PDF, and once you do that, you can email it to the Financial Services Department, okay? Once we get the collateral activity report, we'll go in and restrict the movement, okay? So we won't be able to sell it without getting it released prior to that. Once we do that, within our collateral application, your borrowing capacity is updated immediately, okay? Yep. This is what a collateral activity report looks like. So basic information about your institution, top left, today's date, and your pledging securities activities, the drop down under pledge or release. So are you pledging a new security, or are you releasing one that's already been pledged? And then put your QCD number and then some basic information, okay? Description, QCD is usually pretty good at gets us what we need. But we also need the original par of what you're pledging. If it's coming in, so it's a security you're moving in or you've purchased, and it's not due to settle until tomorrow, on that settle date on the far, at FHLB on the far right-hand side, you put that date, okay? So we use the same form for pledging and releasing. If it's a release, the bottom half, the bottom section would need to be signed by an authorized signer, and that person has to be listed on the credit authorization or credit resolution we have on file today, okay? That's for pledging and releasing securities as collateral to the bank. We also allow our members to pledge securities that are held at an approved third-party custodian, okay? That requires pre-approval, and all of the forms have to be executed by the custodian, yourselves, and ourselves. That has to be in place before we allow you to start pledging. It's a pretty simple process. You know, you send us a request via email. We'll have a little worksheet for you to fill out, and then if all is good, we'll send you back the forms, or the agreements to get signatures, okay? Once you get that, everything's in place. There's an Exhibit A on the back of that agreement. That's how you would pledge or release securities with us. You would send the completed form to us and to your custodian. Once they restricted on behalf of the Federal Home Loan Bank of Topeka. They would send us a receipt. Once we get that receipt, that pledge receipt, we would mirror that position in our collateral application and safekeeping application. We would mirror that position and provide lending value. So it's a little bit longer process because we have to wait on that other third-party custodian to get that information to us. This is an example of the Exhibit A. So up top in your institution, the agreement date is required in there. Again, you're going to fill out pledge or release, put your QCD number, your PAR. Authorized signer has to be on the credit authorization or credit resolution. If you're releasing it, you will send us the request, and as long as you have sufficient collateral remaining, we will release the securities. We will sign the bottom half of this and send it back to your custodian so they can release your securities. Again, it's just a little bit longer process versus having them delivered to the Federal Home Loan Bank. So maintenance on our securities that are pledged. We do a daily reconciliation for all of our securities held in custody to our Citibank, to our custodian. We upload prices daily. We pull values from a third-party vendor. We put them in, upload them into the safekeeping application every day. They have to be eligible. To be eligible, they have to be able to be priced every day. We also do a monthly pricing validation required by our regulators that we pull in information from other vendors and compare it to the price. And depending on how our default price compares, whether you get an additional little bit of a discount or not. We also upload factors daily. For all the private label CMOs, MBS, we update ratings. And on a monthly basis for those securities that are held as third-party custodian, we do require the custodian to send us a statement of holdings, and we do a reconciliation to make sure that our records are in sync with the third-party vendors. All right, so we also take Federal Home Loan Bank CDs or overnight deposits. Again, you'd use the collateral activity report. In the middle section is where the overnight deposit activity section is. You tell us how much you want to pledge or release, and if we need to move the money from your demand account to your overnight account. Or if we're releasing, do you want it back in your demand account, or do we leave it in your unencumbered overnight deposit account? Okay. But if you've purchased a Federal Home Loan Bank CD and want to pledge it, that's the bottom section. You would, again, pledge a release. Again, all releases have to be signed for by an authorized person, again, on that credit resolution or credit authorization form. So is there a rating requirement on securities to pledge? Yes. If it is a private issue CMO or a CMBS, they have to be AA rated or better, okay? Anything below that is not eligible.
And all that can be found out in the member product service guide, correct?
Yes,
so
exactly.
If you needed to look at that, you could do that. Okay, so Lane has gone over a significant amount of information on the QCD form and reporting. So
we're going to talk really fast because we got five.
Yeah, we got 5. That's what I'm going to say. We got 5 minutes, so I'm going to try to hurry this along. So if you are one of our members that you have to pledge and deliver loans, you would be required to complete the appropriate collateral loan listing template. So limited template would be for our blanket pledge members that are on delivery. If you're a specific pledge member, like I said, insurance companies, housing associates, you would have that expanded template. The template would need to be sent through a secured method to our financial services department. And when you deliver in the delivered loans, you would need to obviously send the appropriate loan documentation. So for the collateral loan listing, it's uploaded into our collateral system and it's reconciled against, what you're sent. So if you say you're sending 5 loans, we're going to look at it and make sure there's 5 loans that should have been delivered. Right. So should reconcile. And we're going to review those documents for eligibility. And we'll go through, if it's eligible, you'll get a lending value that's assigned and the borrowing capacity would be updated. If it's ineligible, you would get an exception report that you would see on members only, and it would tell you why it's not receiving any kind of lending value. So that's what would happen if you had to deliver the loans into us. And as far as the restricted asset limitation, it is not applicable when you're required to deliver assets, because we're going to be looking at all of those loans in its entirety. So there's no restriction of the 25% for that. The collateral loan listing, the expanded template, this is required for the specific pledge members. Again, think insurance company, housing associates. It is optional for other members. Market value is determined by the lesser of the UBP or the loan value as determined by one of our third-party pricing vendors, which we do have our prices, or our pricing vendor price the loans on a quarterly basis, and that's kind of how it works there. If you are pricing loans, the member is charged a quarterly pricing fee.
Good news. Good news.
Yes, I was going to say.
We are implementing some fee changes as well.
Yes.
In next week.
Yes.
This quarterly pricing fee is dropping substantially.
Yes.
It's if it was just flat $40 per loan. And now, if it's a multifamily or commercial real estate, it's down to $13.50. If it is a single-family loan, it's down to $3. What a reduction!
Yeah, it's quite a bit of change with all that we have going on.
Sorry about that. I got a little excited.
That's okay. I wanted you to say it too. And then on the expanded template, there are at least 120 some data points on the collateral loan listing that have to be filled out by on the expanded template. It's not optional. And all the templates can be found under members only, under collateral and forms. And for specific pledge members using the expanded template, that information is required to be submitted on a monthly basis within 5 days after the month ends. So that is what we do with them. On a limited template for the collateral loan listing, again, if you are a member on delivery, minus the specific pledge members, non-depository CDFIs, and housing associates, your market value is determined by the lesser of the UPB or an internal present value calculation of future cash flows discounted at the current market rate. In some instances, loan value as determined by one of our pricing vendors, but I don't think that's typically what we do at this point.
Not today.
Nope, not today. And on this, when you're filling out the template, it's a little different from specific pledge members, as you can fill out as many points as possible. You don't need to fill out everything, but there are some that are required, but do your best as we go through that. Again, templates can be found under members only, under collaterals and forms. This information is required to be updated within 30 days. It coincides with the QCD filing, just a little bit shorter, within the 30 days after the quarter ends. And I just want to make a quick note, if you are put on a blanket pledge member or, on delivery, we're going to contact you. We're going to reach out to you. We're going to work with you and walk you through that. So you're not on your own.
Right. So say the member has delivered collateral loans to us. How do you get it back?
Yeah.
Well, typically we can just do it via email.
Yeah.
You can say, please release loan number, blah, blah, blah. It's been paid off or whatever, and we'll do that. But if you're like us, we like forms.
Yep.
There is a form available for that. You add on members only under the form section. So, again, please feel free to do that. So the forms, here's where you're going to find those under the cloud option under forms. Great place. Listing of all the forms that are available out there. Great resource. Reports, real quick, it's the reporting section. This is what it's going to look like. You can have most of them in a PDF or Excel version. The member collateral summary report is one of my favorite go-to reports because it tells us everything that we need to know about you. So hopefully you would find that as all-encompassing as we do. Highly recommend if you don't use it, you should maybe take a look at it.
Okay.
All right? So sorry, I know that was a really quick overview. We're out of time.
We do have a few questions. If our overnight deposit with Federal Home Loan Bank was pledged as collateral, is that reported differently on RCR on the call report in terms of risk weighting? Maddie, I honestly don't know that answer. I don't know the call report. I would have to look into that for you and see if I can help you in any way. But if you could email me at the end, you'll see my email. I'd be glad to help you. You also asked, if the overnight deposits with Federal Home Loan Bank were pledged as collateral prior to the end of the quarter, does that cash have to stay pledged the entire quarter before the next QCD is submitted?
No, you can pledge and release overnights at any point in time, okay? It does not have to be on your books as of quarter end. We treat that more like securities. Securities, you can pledge and release at will, pretty much. As long as you have adequate collateral remaining, we'll release those funds for you, or that security for you.
Yep.
So, yes.
Good question. Thank you, Maddie.
Loans on the QCD report have to be on your books as of 3/31, 12/31, whatever quarter we're on.
Yep.
Securities and delivered loans, overnights, Federal Home Loan Bank CDs, those can come and go at any point in time. Okay?
All right.
Does anybody else have any questions? What is the overall limit percentage of total assets that Federal Home Loan Bank is? Most institutions are capped at 40%.
Oh, yeah.
40% of your assets.
Total assets.
There are a few institutions who have requested additional or under certain other collateral arrangements go less than 40%. But on average, the norm, the default.
Yeah, the norm is 40%, Mike. But there are instances like Elaine alluded to, and the member credit analysis, they do their thing on that and can determine. So,
right.
Mike, we can get with you if you have any other questions on that.
All right, we do have a couple of upcoming educational opportunities. Our annual management conference is just later this month. If you've never attended, we'll highly recommend it. Always have had great reviews. We also have regional meetings coming up in the fall. Look for those. More information will come as these get closer throughout the summer and throughout the fall. You always have the option of just talking with a collateral review officer. You know, we do the collateral review, collateral verifications on site. Great opportunity to get all those questions out. Or if you just need guidance, give us a call, send us an email. You know, we're here for you guys.
Yeah.
We want you to be successful. You know, this is our job. This is what we live for.
Here to help.
Yeah. Here is our contact information. So please feel free to use it. I'm more of an operations side. Deidre's more of the review side. Eligibility questions. If you have questions on, and securities eligibility, we handle all of those. Please feel free.
Yeah, reach out. I have members, and honestly, with me being new in this position, it helps me learn. So please email me with any questions you may have, and I'd be happy to look into that for you. So thank you.
All right. Well, we apologize. We went over about 6 minutes, so sorry about that. We'll have to talk a little faster next time. All right. Well, hopefully you'll all be able to join us tomorrow for our collateral eligibility webinar. It starts at 2 o'clock. We'll go in great detail about each asset category and the requirements that go with those. So we thank you all very much for joining us. We know you have very busy schedules, so hopefully we'll get to talk with you all tomorrow.
Appreciate you.
All right.
Thank you.
Thank you all.
Bye.